Hey, everybody. Don Durrett, Gold Stock Data. I decided to do a video on the top silver producers. Originally, I did it as an article, and then after I wrote that article, um, I was going to do another article on top gold producers, but it was going to be a lot of work. So I couldn't really do it in 15 companies. So I decided to do a video, and then I did a second video on gold explorers and developers, and then I did one on silver explorers and developers. So you had three videos, but I never did a video on the silver producers, so I thought I would do that. So if you want to find that article, if you have access to the forum, the general discussion, the main section, if you go into this thread, Don Seeking Alpha articles, if you click on that and then you scroll down to the last article in June, so it's been 2 weeks now. So we go to the first one that's in June. Actually, it's not. So this isn't the article. This one's my favorites. It's actually, oh, that was still July. This is the first one in June, 6/25, and it's the top 15 silver miners. There's a PDF, so you can open it there. And I have it open here. So here's the article. And the article has 15 silver miners, but in the premium dropdown on top silver producers, that one has 18 stocks. So it has three additional stocks. The three additional ones is Hochschild, Impact, and SilverX. So I'm going to do a quick overview of these, and then we're going to go to the article. And then we'll probably come back here. So first thing I wanted to look at was the upside downside. So green is top 25. So there's no blues in here. There's no top picks. Basically, if a silver miner is a top pick, it's probably going to be on the top 25. So there's of these 18, there's only four that are not top picks. So we have Gatos. The reason why Gatos has done really well. It's only 2.5 upside. So I only go 5 baggers or better for the top 25. So that's why that one isn't there. And then Impact, the reason it's not on the top 25 is because it's only producing 1 million ounces and it's more of a exploration play. Maybe it doesn't deserve to be on here, but I think it's a pretty solid 5-bagger if silver keeps going up, because I think they can expand production. I like their property. We can talk more about it. And then we have MAG. MAG is another one that doesn't print as a 5-bagger, but I have a 3.5 on the downside. So it's basically a good kind of solid 3-bagger, if you will. That's why it's on here. Well, that's why I put it on the other list. So categories, this is the M's are the majors. No, they're not. They're mid-tier producers. Excuse me. Then we have a junior emerging mid-tier. And then we have an emerging major. Then the M is the major. So those are the different categories. Market cap. So Impact, SilverX 54 million, Impact 68, and then you have Guanajuato at 123. Most of them, Avino at 150, but most of them are $1 billion or above. But it's kind of a wide discrepancy from 50 all the way to Pan Americans at 8, which is the top. If we look at their balance sheets, let's see if somebody, so we have Adriatic, they just built their mine, so have 115, 50 million in cash. whenever a company is initially, building a mine, they're generally going to accumulate some debt, and then adds risk. You need to pay that off. Avino, no debt, but very little cash. Aya, they just added some debt to do the expansion of Zgounder, but they're generating a lot of free cash. Coeur, not a, Coeur and Hecla never seem to have a good balance sheet. 585 million, 67 in cash. Endeavor, not a great balance sheet. They just added some debt to build Terronera, so 134 versus 41. First Majestic, 201 million in debt, but they don't have any principal payment until 2027, and it's low interest. It's 3.7% interest annually, which isn't too bad. But in 2027, so they need to, as long as silver prices go up, I expect them to be able to pay this off, but they have a lien. We can talk about their lien. Fresnillo, they have a lot of cash, 500 million. They also have a lot of debt. Gatos, nice balance sheet, 85 and none. Go Gold, 99. But Go Gold is going to have, I think, going to have to take on a little bit of debt because they're going to be building 2 mines. Guanajuato got rid of their debt, which is good, but they don't have a lot of cash. Here's Hecla. This is kind of typical for them. A lot of debt, but very similar to Coeur. I'd like those companies to be a little more cash focused. And then Hochschild, another one with a lot of debt, 350 million. And then Impact. Impact always tends to have a decent balance sheet. I like them to have more cash than 9 million in cash, no debt. MAG, they have a good balance sheet, 59 million and no debt, and they're adding cash, so they'll be over 100 million soon. First Majestic, Pan American, 800 million in debt, quite a bit, 330 cash. And then Silverex, they don't have a good balance sheet, only 1 million in cash, 1.1 in debt, 1 in cash, so a lot of risk there. And then Silvercrest and Silvercorp both have excellent balance sheets. A lot of cash, no debt. Okay, so you can see they all have good grade. There isn't a low, I don't see one low grade in there. 120, Coeur at 120, and Impact at 130, but most of them have very, very good grades. The cost. So I guess I'm going to go ahead and sort the cost. So we have Adriatic, not too many of them are low cost. These are break-even costs. This is not cash cost. So Adriatic, they have a very good margins. So basically, we have very good margins from Adriatic, Gatos, MAG, and Silvercrest. And Hecla used to always have very good margins. They've been rising. Hecla and Aya and Silvercorp at 19. Silvercorp used to always have low ones as well. So you can see how the costs have really started to rise. Nobody that has, super low cost. So you can see low cost silver mines are super rare nowadays. So we got Go Gold, but they're going to build 2 mines. Fresnillo, 23. Those are decent margins, but investors have not been interested. Yeah, we have this is the actual current margin per ounce. So we have 23, Pan American at 23, Hochschild 24. So at $30, the margins are $7 isn't too bad. Coeur at 25. I think anything that's 25 or higher, I consider high cost. So we have Coeur, but their share price has been doing really well, but They're not a low-cost producer. Avino's cost is going to come down as La Precocia, once they build that. Impact, high-cost producer. I don't know if they'll be able to get their costs down as they expand production. Endeavor, their costs are going to come down after Terranera, when it comes online. I expect their cost to come down to about 2021, because Terranera, the break even should be about $5, with the cash cost about, could be negative $1-2, but Terranera is a really low cost silver mine. First Majestic at 26. That's one of the reasons why people are, kind of really negative on it. But First Majestic's cost should come down. 90% of their mines right now have a $17 AISC, which is about $22 break even, around there. So I think they should be able to get down to 22, at least 23 by the end of the year is my guess for First Majestic, which is going to help them. Silver X, we won't, very high cost. We're going to AISC around $20. I think they could get their costs down to 18, 18 AISC, and so maybe get it down to 24. They're going to release their financials here in about a month. We'll find out. And then Guanajuato. So these are Guanajuato and Silver X, they're kind of a high risk, low, small producers, but tons of leverage. So these companies that are like, 24 and above, they start to get healthy about $35 silver, and everybody else is kind of okay at, 30, 31. They just get better. Okay, so let's R&R. So if we look at their resources, I'm going to do it the other way. So we got Fresnillo at 2 billion ounces, Pan American at 1, First Majestic 600, Hecla 600, IF 450, Coeur 4, Avino 365, Endeavor 350, Silvercorp 350, Adriatic 330, Go Gold 300. So 300 and above, those are really, large resources. Then you start getting a little smaller. But Hochschild also has gold. If I go back over here, so we got Hochschild has 15 million ounces of gold to go with their 200 million ounces of silver. Silver X 150, Silvercrest 125. So Silvercrest they need to get this bigger. They need to add about 30 million ounces. MAG 100 million, that's really, they're producing about 10 million a year. So MAG isn't looking, like a long life mine. It's starting to add some risk there. Guanajuato, they're pretty good at replacing their resources. So they're producing 4 million a year, and they only have 62 million. So they're, but all four of their mines, I think, have exploration potential. Gatos concerns me, 50 million ounces. Gatos and MAG concern me as far as small resources. Then Impact, small producer, 1 million ounces a year, but I think they can add. Okay, so now we'll go to Upside. So we go for cash flow. Let's go ahead and do it the other way. So we got Avino as a 43 bagger, Guanajuato as a 27, Silver X 25, Go Gold 23. So those are your 20 bagger. Those top four are the ones with the huge leverage. But Avino, it's going to take them 5 years to expand their production out. So it's a long-term bet. Guanajuato is already at 4 million ounces. So I think I'm valuing them at 5 million. So Guanajuato has a ton of leverage here. Silver goes to 50. Silver X, they have to build a second mine, so they need to grow their production to become the 25 bagger. Go Gold has to build 2 mines to do this. First Majestic has to put Jarrett Canyon back online. Adriatic, they don't have to add very much production. So Adriatic and Guanajuato have a ton of leverage, and Silvercorp, First and Fresnillo, these companies all have a ton of leverage from 30 to 50 silver. They don't need to add a lot of production. These stocks are just cheap. They're being ignored. Silvercorp's ignored because they're in China, Fresnillo in Mexico. I don't know why, but investors just don't like Fresnillo. Endeavor 900%. It's already done pretty well over the last few months here. Still has a lot upside still. For Impact, you can see it even though it's tiny producer, it still has a lot of leverage. Coeur 7-bagger, Hecla 7-bagger, which is kind of a shocker that Hecla has that much upside. Silvercrest almost a 7-bagger. Hochschild 6.5, Aya about 6, and then Pan American 5. And so we actually have two kind of stragglers here with MAG and Gatos. Okay, so now I was going to show you the article, and we can look at some of these names. Adriatic. So Adriatic, there was a little bit of a rumor on Twitter that Adriatic had a legal issue about the government procuring their land and having to give the land back. But I sent them an email and they replied back and said it only affected their overflow leach pad or something. It was basically, it wasn't going to impact their current production. So it was kind of a nothing burger and people were getting a little concerned. So I have here that it looks really juicy because it's one of the lower cost mines. So they have a lot of silver. It does have, it's silver equivalent. So you always have that issue, but it's high grade. When I say the silver equivalent, it's basically, you're dependent on these offsets for the cost, but they have a very low AISC. We're going to find out in the first quarter. They're ramping up production now. So there's always risk with these initial ramp ups. So 50% of the revenue is from silver and gold. So you got 50% base metals, but it's very high production, 15 million ounces. It's a bit of a short mine life, but they have a lot of resources. So I expect them to extend it. I think it's a 10+ year mine. Management wants to be aggressive. They want to grow the company through acquisitions. So the AISC is supposed to be under $10. So if that's the case, the break even's about 15 is kind of where I'm looking. So if they hit their AISC number around 10, they would be good. If it goes all the way up to 12, then their share price isn't going to jump as much. So that will reduce their free cash flow a little bit. But on the whole, Adriatic, the risk reward looks pretty strong to me at currently. But again, we have to wait and see how that next quarter goes. Avino. So Avino, their production. I want to show you Avino's production profile. So this is Avino's production profile. 2024 is only 2.5 million ounce producer. So they're 2.5 million producer, and they've jumped. Their valuation is jumped to 150 million. It was at 100 million, so it's up 50%. It was trading below 50 cents. It traded at 42 or 43 cents, and now it's at $1.50. I remember when it was under 50 cents, I just thought it was just silly cheap. I just had a feeling we weren't going sub 40 cents. Like it was a perfect stock to buy to the bottom. But the reason why nobody was giving it any love is because it was only a 2.5 million ounce producer. But what they were ignoring is this steady increase in production. And it's low cost, the CapEx. Their CapEx to jump from 2.5 to 3.5 is $10 million. That's all it's going to cost them to start production at La Precocia, which is unbelievably cheap to add 1 million ounces for $10 million CapEx. And then they're just going to steadily grow. So I have only 2026, they jump to 4, and then they have a pause and they don't jump again until 2028. 2028, they're going to bring on their both more ore from La Precocia and then their tailings project. I wouldn't be surprised if 2027 this jumps to 5. But you can see we got to go all the way to 2029 before we get to 8. I think I'm valuing at 7 million as a 7 million ounce producer. The reason I wanted to show you this production profile is just to show you it's a long-term bet. So yeah, I'm valuing them at 8. So at 8, it prints out as a 40 bagger. But Avino, 80% of their shareholders are retail, and I just got to believe. So they basically don't have any insiders. They have less than 10% insiders. So if somebody comes and makes an offer, they're going to have to bring it to the shareholders. And I just think that any quality company that makes an offer for Avino, it's going to go through. It'll get approved. The investors just they don't turn to vote down those deals, even though you're giving away all your upside. They tend to get approved. So that's why I think once silver gets to $35, someone's going to come in. They're going to do the math on Avino and say, I can get 8 million ounces of production for $200 million. The longer they wait, though, the higher it's going to be. That's why I think it'll happen at like $35 silver. Because if they wait for till $40 silver, then Avino's going to be jump to 250 million. And then they're paying $300 million for 8 million ounces. It's still not it's not super pricey at that point, but it's getting, much pricier than if someone would have bought it today. But it is, the risk reward on Avino looks really strong. The next one is Aya. So I said I would definitely have Aya on my top 5 list of silver miners. The reason why is because I think the location is good. It's in Morocco and Northern Africa, but Morocco is I think it's a monarchy, but they haven't had any issues in that country, and it's a mining friendly country. I think the location's okay. And then they have 2 of the best silver mines. Zgounder, which they're increasing production to 7 million ounces this year. They just did their first pour, so they're ramping up now. It's a pure silver mine, which is amazing, 300 grams, a pure high-grade silver mine with a low AISC. And it's growing in size. It's 100 million ounces and growing in size. And it's not their best mine. So when you combine that, the next one, their best mine is Boumadine, which is already 330 million ounces, but this one is silver equivalent. It has silver, gold, and I think lead and zinc. But it's high grade silver equivalent, 420 grams. And they haven't even been drilling this thing that long, and it's already 330 million ounces. So here we have 2 really strong mines, economic. They just finished building Zgounder, so now they're gonna focus on Boumadine. So it just looks really, really strong. Coeur, I really liked Coeur when we had these sell-offs, and Coeur got cheap. I think it got down to 210. It was just, it was kind of crazy cheap. Now it's up to $6, I think, but it's still, I showed you, it's still, over a 5 bagger still, it's still cheap, but it was super cheap. Now, the balance sheet is not great, a lot of debt, not a lot of cash, but they're generating right now, their margins are okay. They're generating enough cash. It's not a problem. The issue, it's just one of those things you don't really want to chase a stock. Um, Coor would be kind of one of those names I I would be tempted if I was going to add to it. I'd be tempted. I might want to wait here and see if it drops down to $5. Ideally, I'd like it even cheaper, but I don't know what kind of a dip we're going to get. Um, I don't. I'm not expecting any deep corrections, so it's one of those ones you have to decide. Do I want to chase it here? They do have one fairly strong development play, but it's going to take a while, which is Silvertip project. Um, Silvertip looks like a really strong silver mine in British Columbia, but I think it's going to take them, they're probably going to drill it for about 3 more years before they start developing. It's kind of a long term, but that's really the only thing in their pipeline right now. But their existing mines are fine. If gold and silver take off, I think Coeur is going to participate. I do think it definitely does have five bagger upside. It's definitely a stock I definitely want to own, but it's not super exciting. I don't know. Endeavor is it's really done well. I think Endeavor got all the way down, I think like $1.50, maybe even lower than that. I got really cheap and it's basically been flying. It's over $4 now. Um, and the reason why it has a really nice pipeline. So Terronera, which is getting built right now, comes online next year. A really low cost mine. It's going to drop their costs down. Terronera, I have an ASIC of $5, so the cash costs are like $1. I mean, it's a really low cost mine. Terronera is that's one of the reasons it's been ripping higher. And then after they get Terronera online, Pitarrilla is going to be next, and that's going to add. It'll take them some time to develop Pitarrilla. I'm thinking, or at least 3 years out before we see any production at Pitarrilla. But it's a big mine. It could add another 6 to 8 million ounces. So I consider Pitarrilla kind of Endeavor is a long-term play, like Go Gold and Aya, where they have to build these second mines. So Go Gold has to build two, and then Aya's got to build Zagounder, Boumadine, excuse me, and then Endeavor's got to build Pitarrilla. So these are long-term plays. The other one, of course, Avino is the long-term play. First Majestic, they've been a disappointment. Their costs are high right now. Shareholders are disappointed for sure. It hasn't really performed as well as some of these other stocks. They don't have a great balance sheet and they have high costs. They don't have much of a pipeline, especially in Mexico. What they do have is they have Jarrett Canyon, which I think is going to produce at least 100,000 and probably 125, maybe 150. I think they're targeting 150, but I think 125 is probably a good estimate. 125 ounces a year when they restart it in 26. And then once they restart it, then they're going to start drilling some more. So they can't drill a lot between now and when they restart the mine. They can drill enough to, get an idea, kind of where they want to, restart this thing at. But once they get the mine restarted, then they'll drill more aggressively. And at that point, I think it'll get up to 150, maybe even more. I mean, it's not inconceivable it could get all the way to 200,000. It's a big property with a lot of, drill targets. But I think, 125, 150. So if they get to 125 in 2026 or 100, that takes them at least to 30 million ounces of silver equivalent. And that is as long as Jarrett Canyon has an ASIC of around 1,700, it should be, they should, First Majestic could be a really interesting turnaround story in 2026. That all comes to play. Now, they do have this tax lien. So the tax lien is, it's supposed to be resolved next year. So the new administration comes in and they want to do arbitration. And so it looks like I didn't mention the tax lien on here. Oh, here we go. Um, yeah, the big risk for them is their tax lien. So I don't know the exact how much money it's up to right now. They listed it at $150 million tax lien, but I read somewhere that Mexico considers the tax lien with penalties as high as $500 million. But that might just be for leverage. But if they lose in arbitration, it's hard to say how much money they could be, on the hook for. So that until that tax lien is resolved, I think First Majestic adds a lot of risk. Fresnillo, so Fresnillo is one of the largest silver producers. They produce about 60 million ounces of silver. It drops next year to 55 million ounces, but a they have a lot. I forget. I think they have a lot of silver resources. So I think they'll either be able to maintain this or maybe increase it. 2.2 billion ounces. I was going to guess two. So they're all in cost about 23. So these guys, they generate a lot of free cash flow, at $30, 31 silver. And then as silver goes up, they just generate more. They also mine 600,000 ounces of gold, which is a lot. And their ASIC is about 1,400. So they generate a lot of free cash flow there. And they have a lot of gold, 38 million ounces of resources. So Fresnillo, as far as resources, free cash flow, economics. I mean, it looks great. The balance sheet isn't that bad. 500 million in cash plus one shareholder owns 75% of their shares. Uh, they're not going to sell. They basically, I'm sure they're bullish that, precious metals. There's no way this company's for sale, so that's a good thing. And it's super cheap. So Fresnillo is a bit of a mystery to me why it's so cheap, but I'm expecting it to do well. Gatos, they've done really well because investors like, low cost, high free cash flow, good balance sheets. So they have 85 million in cash, no debt, a low ASIC, generating a lot of cash, but they don't have a lot of, they're currently producing 6 million ounces and production is going to decline. I mean, it could be down to 4 million ounces by 2027. So they're okay for like 3 years and then it gets a bit dicey. So they need to expand it. Now they have been hitting some pretty good drill holes, and I think they're going to be able to expand it, out to, at least 2030. But I don't, but they are a company that makes me a little nervous. It's basically a company I'm probably going to jump out of around $60 silver because of, unless they make an acquisition, but I'm a little concerned about the resources. Go Gold. Go Gold is a thing of beauty. They have Los Ricos South and Los Ricos North, and both of these mines are very, very strong mines. They're 90% of the resources is underground mining, so it's not a problem. And they're not going to mine the open pit section until the very end of the mine life, so like 10 years from now. So basically, it's close to surface stuff. They're going to wait and mine it last. And the capex is amazingly cheap for Los Ricos South. So this is where they're going to start. They're currently working on permitting, but it's an underground mine. But the capex is only 125 million to produce 6 to 8 million ounces with an AISC of $12. It's one of the better silver projects out there. Is when you run the numbers on it. And then Los Ricos North. So once they get this guy built, then they'll turn their attention to Los Ricos North, which is even larger. It's 8 to 10 million ounces annually. And it has about the same AISC, a little larger CapEx. The CapEx is about 220, I believe, for Los Ricos North. But when you combine these two, plus their tailings projects, about 1 million ounces a year, 1 to 2 per rel. So to combine, you're going to get, it's basically a 15 to 17 million ounce producer in 2027, another long termer. But that is, really big upside when you've got that much free cash flow potential. I expect them to get taken out before 2027 as the prices of silver goes higher. But maybe not, but they're just going to be worth so much money, and they're in Mexico. I just think at a certain point, they're going to get offered enough money where they will take it. I don't think they'll get taken out before $1 billion, but somewhere in there, they definitely are a candidate just because it's really valuable. Guanajuato. So Guanajuato is highly leveraged to the silver price. So they have high cost, about $26 break even. So every dollar above 26, 27, 28, they add $4 million in free cash flow. So, which is good. So their balance sheet will starts improving, especially when we're at $31 right now. Every quarter, their balance sheet's going to start improving. And as their balance sheet improves, the risk of the company goes down, gives them a lot of flexibility, especially for exploration. They can drill more aggressively, and they can spend money on getting costs down and stuff like that. And so, yeah, the company starts getting healthy around where we're at right now, about $31, $30. And it just progressively gets better as his balance sheet improves. Because they do have low resources, 60 million ounces are producing 4 million a year. So, it's less than, it's 10 years of production. But I think but these are mines that just keep replacing their reserves. And they have four places to do exploration. Plus, Penguico really hasn't been drilled that aggressively. It's an old mine that has many levels. And it hasn't really been drilled in the modern drilling equipment. It's a very old mine. So I think Penguico we could find some high-grade silver there. So Guanajuato, it was a really risky company at $25, $26, $27 silver. As a matter of fact, they had to do like 2 financings, and because they were losing money. But now, it starts improving, starts looking better at $28, $29 silver. Very similar story to Silver X, kind of a small producer, wasn't making money at $26 silver, having trouble. But the silver price kind of gets them healthy and allows them to accomplish their goals. And they become just huge leverage on those 2 companies. Hecla, I consider Hecla the top tier company. And the reason why is because of the location of their mines. When you think in terms of, silver producers of 5 million ounces or more, they're very rare in good locations. And so Wall Street, when they look around and say, okay, which gold miners are going to buy? They're going to buy Newmont, Barrick, Agnico Eagle, and they're going to say, which silver mines am I going to buy? And the first one they're going to go to is probably Pan American, but Pan American has basically become a gold miner. The second one they're going to go to is Hecla. The third is going to be Coeur, and it's because their location of their mines are in good places. Hecla is not in Mexico. It's in the US and it's in Canada. That's it. So it has good location, the location of their mines. And then on top of that, it has a low ASIC. So the ASIC is about $13. So generating free cash flow. You get the combination of location, economics, and then the brand name. Like Hecla, everybody thinks in terms of, okay, who's the silver miners out there? So Hecla is going to win on that brand name recognition. People are, Wall Street, the hedge funds, they're going to buy the companies they know and they're comfortable with. Like Aya, who's Aya? What are they doing? Morocco, what's they kind of lose sight of, they don't really want to do the research. It's like Adriatic, there's like, where's that at? It's in Eastern Europe. No, I don't want to touch that. And then a lot of companies are concerned about Mexico. So like Fresnillo, well, I don't really want to be in Mexico. So Hecla and Core are going to benefit from the location. So they're currently, I think Hecla is currently mining like 16, and so they're going to go up to about 20. But interestingly, First Majestic, who nobody likes, they're mining more than Hecla. First Majestic is at 22 million ounces. So they produce about 16. Oh, they also produce 175,000 ounces of gold. So First Majestic is going to go 22 right now of silver equivalent plus another 125 from Jarrett Canyon. But yet people think Hecla is bigger than First Majestic. But it really isn't. But you can just see Hecla has more kind of brand name recognition, if you will. But as far as free cash flow goes, when you compare them, it's kind of interesting. So first, Hecla prints about, I would still rather own Hecla, of course. They print about a 7-bagger, I think. And First Majestic is a 10-bagger, but I'd much rather own Hecla. Like I said, I would rank it number one. It's kind of a must-own stocks because of that kind of the go-to name, what everybody's going to buy. Mag Silver. So I said I put them on the list, but I'm not a fan, and I consider this more of a royalty play because they don't operate their mine; they just get paid. It's just a JV, 44% JV interest in Juanicipio, so they're getting paid. They just get a check in the mail. They're just an owner. They just have ownership, the JV ownership, 44%. Juanicipio is a really strong mine, but after 8 years, it starts to drop. And Fresnillo is not currently drilling it aggressively. And MAG has no say in the exploration of Juanicipio. They can't say, hey, we'll drill it. Can we drill it? That's not how it works. Fresnillo is the operator, so Fresnillo gets to drill where they want to drill, and Fresnillo gets to decide the budget. MAG doesn't have a choice in that. And right now, Fresnillo is like, no, we're not gonna drill Juanicipio aggressively. Yeah, they are drilling it, but no, it's no 20,000 meter drill program. So that's not good for MAG. So we don't really, I remember 5 years ago, they're always talking about how Juanicipio was going to double in size. It's massive already, and it's going to get bigger. Well, that never happened. So MAG really doesn't have a pipeline. The only thing they have is they have a couple mines that they're doing exploration. They have one in Nevada, one in Canada, but neither of them are really that exciting. So, I mean, MAG looks like a pretty solid 3-bagger, just because they're generating a lot of free cash flow. But after year 8, it falls off. So I don't know when that'll start to impact the company, but it will. But they have an ASIC like under 10, which is great. So they are generating a lot of cash. So at $50 silver, I have them generating about 250 million in free cash flow. So what are they going to do with that cash? Give it back in dividends? Probably. Buy back shares? Probably. Will they buy another company? Probably not. It's possible though. As far as I mean, an existing producing mine, no, they might acquire an exploration property, but there's a lot of unknowns there with MAG. Pan American, um, Pan American is today mostly a gold miner, 925,000 ounces, and 26 million ounces of silver, which is a lot, but it's only about 25% of the revenue, 20%. So the silver production is only 20% of the revenue. But they have 1 billion ounces of silver, and they have two large silver development projects, one in Guatemala, which is Escobal, that it's on care and maintenance. So the restart, the key here, they need to get their permit back. It's been on care and maintenance now for about 5 years, but they think they're going to be able to restart it. They've had legal issues, and I think they will restart Escobal at a certain point. And then Navidad in Argentina is another large one. It could produce, both of these can produce 20 million ounces, so they could add 40. So they're currently at 26, and they could go from 26 to 66. They would be the number one silver producer in the world. As a silver miner, I mean, there may be somebody that's is higher than that, but if so, they're basically right around the top silver producer if they build both of these mines. I'm a big fan of Pan American. I think the stock's going to go to $100. It's currently about 22. So I think it's a five bagger. It's another one of those companies. It's kind of a brand name that everybody knows that it's going to be kind of a darling on Wall Street, I believe. It's going to be a nice performer. Silvercrest. Silvercrest is a very strong silver miner for a number of reasons. Number one is they generate a lot of free cash flow. 10 million ounces a year of production with an AISC around $12. So an all-in around 18. So their margins right now is about $13 an ounce. 13 times 10, $130 million in free cash flow. Plus they have 80 million in cash and no debt. So they are closing in on a balance sheet that's ready to make an acquisition. I expect them to make an acquisition before the year's over because once you have 100 million in cash and you have a single mine, it's time to expand. Now the Las Chipas property has a lot of drill targets. They need to expand their resources. I think it's easily a 10-year mine life, but I think it's going to be at least 12. They think that they already know where to drill to take this thing to 150 million ounces. So they're currently at 125. So they can add 25 fairly easily, which is another 2 years, which takes them to 10. And I got to believe they're going to find another two. So, but a 12-year mine life isn't long enough. They're going to have to find a way to grow production. Will they buy a gold miner? Will they buy another silver producer? We don't know. But this is definitely a company that doesn't have a pipeline that needs one. So are they going to buy a Vino or a GoGold? Those would be ideal pipelines. A couple other New Pacific Metals has a big silver project, Discovery, but I don't think Discovery's for sale. There's not a lot of choices out there. So what these silver companies have been doing, they've been acquiring gold miners. So it's possible they do that. They basically move away from, I mean, that's what First Majestic did. They acquired Jerritt Canyon, which is a gold mine. Fortuna used to be Fortuna Silver, and now it's basically a gold miner. SSR Mining was a silver miner, now they're a gold miner. Pan American, another story. So the reason why is these companies, when they need to grow and they go look for opportunities, and there's no no silver mines for sale. Okay, so the last one on this list is Silvercorp. I was a little nervous about Silvercorp because they're mining in China, and I sold half of my position in Silvercorp, but the other half is doing really well, and I'm fine with it. I'm not gonna sell the second half. Um, Silvercorp, they've always done a good job with their balance sheet. They have 200 million in cash, no debt, and they're good executors. They generate free cash flow. The AISC right now is around 10, so free cash flow is around 18. So, $13 margins right now. They're mining about 6 million ounces. That's growing. They're currently building a second mill in China, which is going to, take the production up. uh, they made an acquisition of Adventus, but they just announced that looks like they're going to back out because Adventus has a legal issue on their El Domo project. So I've been waiting for Silvercorp to acquire another company. They tried to acquire a company in West Africa, and then Perseus basically came in and bid over the top and got that. I was thinking it was Ore Corp who got it. So then they moved over and they made this deal with Aventus. They paid, I think, like a 30% premium for it, but now it looks like they're going to back out. So I kind of like this deal because it's two projects. El Domo is a copper project, but Condor was a really nice gold project. 200,000 ounce a year, 6 million ounce gold project. So they were getting both of these projects, and they didn't pay very much for it. Yeah, 150 million dollars. So I thought it was a pretty good deal, but now it looks like they're backing out. So we'll see. But I'm I I'm not as worried about Silvercorp as I was before about China invading Taiwan. Even if that happens, this is a Canadian company. So the key here is, does China do they penalize Canada for being an ally of the US? Do they basically nationalize the mine? Um, there's a lot of Chinese in people in Canada. I just think that Canada and China will find a way to maintain their relationships, even if the US has an issue with Taiwan. So I'm okay with that, with Silvercorp from that perspective. Um, so the three stocks that aren't on that report, we had Hochschild. Let me hit this guy here. We had Hochschild, which Hochschild, they had a lot of problems. They're having high cost problems, they're having permitting problems. They're mainly in Peru, but they acquired two gold projects in Brazil, and both of them I really like. They got one from Amarillo Gold that they acquired. It's 80, 100,000 ounces a year for 10 plus years that they didn't pay that much for. I think like 120 million. And that one's coming online this year and next year. I think it was Mariposa or something like that. And then they just acquired Cerrado Gold's flagship property for a great deal. So they acquired two really strong gold projects in Brazil to go with all of their properties in Peru. So I'm a big fan of Hochschild. So they're producing 200,000 ounces of gold, but 8 million ounces of silver, and they're adding more gold, but they do have enough silver production. They're a 5 million ounce silver producer, and I have them growing to 8. So they have a lot of resources, 200 million ounces of silver, and their costs are okay. Um, their margin's almost $7 right now per ounce. So 7 times 5 million. So on the whole, it's a gold silver producer. It's kind of like Coeur, Hecla, 666. Maybe that's a bad omen. So I'm a fan of Hochschild. Next one was Impact. So Impact, it's a small producer. I'm never a fan of small producers. This is one of the few that I kind of like. And the reason why is because they're a survivor. They've been around. They don't produce a lot, 1,000,000 ounces, not generating very much free cash flow. But their property, I like their property. I'm not even valuing them as growing production. So even with no growth, even with no growth, they print as a 7-bagger. So the numbers don't lie as far as I'm concerned. So if they produce 1 million, if they can generate 75 million in free cash flow, so it's $75 on $100 silver. So if silver basically blasts off and they're all in as 25, but I think this production is going to grow. So I'm okay. So yeah, I only have them at $25. I have their costs staying the same. Maybe that's a little too conservative. I think one of the reasons why I have it low is I expect them to add production. And the last one on here that it's not on my report would be Silver X. I mentioned this one as being it gets healthy with higher prices. They have 2 projects that they're trying to expand production. Tangana, they want to double production. It's currently at a little under 2 million ounces a year. They want to take it to 3.54 million ounces next year. And then they have another project that they want to build. It's the same project. The property is close to Tangana. It's called Plata. So they want to take Plata to about 2 million ounces. So between them, 5 to 6 million ounce producer by 2026. So that would kind of mirror what Guanajuato wants to do. 5, 6 million ounce producer by 2026. So if they accomplish their goal, the key here is how much money it costs them. Can they execute? Can they build them? How much do they dilute into the ground? But as far as leverage goes, definitely have a lot of leverage. Okay, guys, that's the silver producers, and I'm finally done. Until next time, I'll see you guys.